Hello, everybody. It is Sunday, the 22nd of January, and I'm going to continue with my financial tips on how to beat the banks and the financial institutions at their own game. So, in other words, for you to take control back of your money rather than being steered or waylaid by them in the way that they want you to go. And what a better topic to talk about on a lovely sunny Sunday afternoon than life insurance. Lovely. Just what you want to talk about today. But anyway, no, in all seriousness, life insurance probably one of the most important purchases that you'll ever make, but you don't know yet until somebody dies. I know that sounds horrible and sounds morbid, and I'm laughing, but it's a very, very, very real situation. Now, am I going to be on here to preach to you about life insurance and the importance of it and the benefits and all that kind of thing? No, that's not my job. I've been there. I've done all of that. I've done 10 years of selling the stuff when I worked in the bank and all sorts of insurance. And really, the position I'm in right now is that I am very well aware of how this stuff has been sold to you guys because I've done it. And basically, behind selling insurance to people is a target and commission and bonuses or that kind of thing, and that's the way I was trained to sell it, to get the best bonus and to get the best target, and I was good at it, believe me. I worked my way up to be a manager in a bank on the back of selling that stuff, loans, etc. But anyway, I've been in a very fortunate position now to be part of a business that's about rectifying all those wrongs that I did, because the stuff I sold was not necessarily what was right for the consumer, but what was right for, the bank and their pocket and their targets and their profits. Yeah. So now I'm able to, rectify those wrongs that I've done in the past by becoming a financial educator. So what I do now is I help families scrutinize through the stuff that they have been sold, look through the small print of their policies, and show them whether what they've been sold or what they've chose to buy, it was good enough for them and their family. So here's a few tips on the things to look out for, because I tell you what, see what you're going to do. If you do anything today is grab your insurance policy. It'll take you 5 minutes, and I want you to look out for the following things. You see, the insurance companies play on the fact that they know you're never, ever, ever going to, read through that policy. You'll buy your life insurance and think, great, stuff it in a drawer, and the next time you're ever going to look at it is when in the unfortunate event of something happening, and there's all this small print, tiny writing. My job is to help you go through that and see if what the stuff you've been sold is the right thing for you. Anyway, this is what you're going to look for whenever you go and dig out your insurance policy. Okay, so there's 4 red flags you've got to look for when it comes to your life insurance or illness policies. And believe me when I tell you that about 99%, probably 9 out of 10 or 99% of people that I go to see have got 1, 2, 3 or more of these red flags in their policy. And it's a no-brainer, to help them get that sorted out. Okay, so number 1. Okay, number 1 is your policy joint. Okay, so if you've bought a policy, no doubt you've probably bought it with your husband or your partner, and you've bought it on the back of your mortgage, and the insurance people have said, oh, you need a joint policy. If you've got a joint policy, that's fine, it serves a purpose, but what it's going to pay out, it's only ever going to pay out for one person. Okay, so it's joint policy, joint life first to die. Okay, so if your partner dies, for example, and you stay living, that policy is going to pay out, and that's fine. You do whatever you want with all the proceeds, pay off your mortgage or give some to your kids, whatever you do. But let's just say 10 years down the line, you die, yeah. Well, there's nothing left for your kids, or there's nothing left to pay off your debts or whatever it is you've had remaining. Or maybe you didn't pay the mortgage off first time round when your husband died. You used it for, to supplement his income because it was missing after he died. And, your kids are then left, with, a big mortgage. So, if you're looking for life insurance, make sure that you have a separate one. Now, if I was to tell you that you can get 2 policies, what's one each, yeah? for a similar price, same price or less than a joint one. Would you believe me? You probably wouldn't, but you can. Okay? So the insurance companies know this. You're paying double the price for one payout, whereas if you get a separate one, you have two policies, one each, yeah? It'll pay out on each of your death, and it's no dearer, no more expensive. Okay, right, moving on to the next bit, okay? Oh dear, dropped it. Second thing then is your policy decreasing? Definitely go and dig out your policy today, and if it says decreasing on it, you've really, really, really got to look at this, okay? Now, usually people take a decrease in policy, or they're sold a decrease in policy by the insurance company on the back of a mortgage. So let's just say for a toxic, you've got £100,000 mortgage, okay? So at the start of your policy, they're going to get, or the start of your mortgage, the insurance company is going to sell you £100,000 insurance policy, okay? Now, that is going to last you for, there, look, can you see there, 25 years. All right, okay? But because it's a decrease in policy, it's going to go down in value. It's going to decrease in value, hence the name decreasing. It's going to decrease in value to zero in line with your mortgage, okay? So you're probably saying, oh, well, that serves a purpose. That's fine because I know my mortgage is going to come down. So say for toxic, you die here. Yeah, say year 5 or something, and your mortgage is 80 grand. Well, if you die, the policy is going to pay out 80 grand. If you die, say here, say year 24, the policy's worth £1,000 and it pays, and your mortgage is only got £1,000 owing, so your policy will pay out £1,000. Great, serves a purpose, yeah. But the thing about the decreasing policy is you're paying, let's say 50 quid, 50 quid, 50 quid every single year for 25 years. And then you die in year 24 and you only get £1,000. Crazy, isn't it? See, the insurance companies know this and they play on that, yeah? They prey on people, you know, who don't really understand this stuff. So they'll sell you a decrease in policy. Great. They know that most people with life expectancy, most people will die, if they're going to die during the course of their 25 years, in year 15 or more, okay? So they know that they're going to get 50 quid, 50 quid, 50 quid, 50 quid every single month from you for 15 years at least or more, for to have a wee very, very small payout, a £3,000 payout or a £2,000 payout. Quids in, aren't they? That's why these insurance companies have a really bad reputation. It's not that what they sell is bad, it's how they sell it is bad. That's what it is, okay? So anyway, so does that make sense to you? Now, what if I was to tell you that you could get a level policy, yeah? A level policy rather than decreasing. Now, level means that it stays 100,000 the whole way through the course of those 25 years or whatever length of time you take it, yeah? Now, you'd think that would be a dearer policy, wouldn't you? £100,000, you know, so if you were to die here, say year 20, you'd still get 100,000. If you were to die, you know, year 10, you'd still get 100,000. Would you think that would be dearer? You probably would. Well, it's not, yeah? There are many, many, many policies out there. You can get separate, you can get level, replace your joint and decreasing for the same price, less even, okay? Eye-opener, eh? Anyway, next thing I'm going to talk to you about is critical illness, okay? So more than likely with your life insurance policy, you've got critical illness built in there as well, okay? One thing I want to tell you about critical illness, I'm going to do a whole video on that itself, so I'm not going to dwell on this too much. But if you've got a critical illness policy, think about it. It does what it says on the tin. It will only pay out for the most critical version of your illness, okay? Now, would you ever dream of going and buying car insurance that's only going to pay out for the write-off of your car? What happens if you damage the wing or somebody dented it into the front of your bonnet or whatever, you know? So it's the same with life insurance. It's the it's the same with critical illness insurance. It's the all or nothing thing. So it's only paying out for the most extreme version of the illness. Now, what if I was to tell you that you can get, there are illness policies out there that will pay out if you were to get a more minor or a more medium aggressive cancer, or quite a minor heart attack, yeah? I'm going to do a whole other video on that again. But, you know, if you've got critical illness, you better be sure, if you want it to pay out, that you get the most critical version of the illness, because there's many, many, many people have rang their insurance companies and said, hello, I've I've got cancer. Can you please pay out my critical illness? And they'll say, right, let's get your records from your doctor. Oh, sorry, you've got the wrong type of cancer. Or sorry, it's not aggressive enough. Unbelievable. Okay, so there's horror stories out there, and I'm going to do a whole video on that another day. Okay, the fourth thing to look out for, okay, is when you're taking life insurance and critical illness, is make sure that your life insurance, it needs to be separate from your illness policy, okay? Now, the vast majority of clients I go out to see, they've got a life, it's what it says on their policy is life or critical illness, or life and critical illness. And, you know, it says £100,000 and you think you've got £100,000 for your life insurance and £100,000 for your critical illness. Wrong. You've actually got, it's one or the other, okay? If you die, bang, you get your 100,000. Fair enough. That's if it's level, by the way, rather than decreasing. But there's many people out there will claim on their critical illness and it pays out. Let's just say, for talk's sake, that's a whole other ball game, but let's say it does pay out. And it pays out a full £100,000, okay? The last thing, right? You think you're going to do this, but it's not the case. The last thing you're going to use that £100,000 for is to pay your mortgage off if you get a critical illness. Most people, the first thing they'll think of to pay if you've got a critical illness is for you know, money to sort of renovate your home, maybe money to get, you know, sort of private care, the best care that you can get, the best treatment. You'll use that £100,000 to recuperate, to go on a, you know, a fantastic all expenses paid holiday. You'll use that money, you know, to supplement the income that you're losing because you're out of work, for example, for 6 months or a year. You know, the last thing you'll want to do is use that money to pay off your mortgage. Some do, you know, but, you know, oftentimes people don't pay the mortgage off of that 100,000 when they get a critical illness. But, so what happens then is you've used a good bit of that money and you die, right? Say 6 months, a year down the line, you die from that critical illness. Then you're still left with the mortgage, or your partner is still, or your family's still left with that mortgage, you know. So when you have life or critical illness as a policy combined, it's not going to pay out for the life because they've already given you the money for the critical illness. So you need to have that totally separate. Okay, right, not going to go on too much. I've gone on for so long here, but it is a really important topic. Just going to recap. If you go and look at your policy today and it's joint, you need to get it changed, yeah? If you're happy with it, keep it. If you're happy paying double for one payout, that's fine, up to you. If you look through your policy and you've got a decrease in policy, if you're happy doing that and you're happy for to get to year 21 and it only pays out £3,000 as opposed to having a level policy and it'll pay out a full 100,000, well, that's fine. If you have critical illness, that's another thing that needs to be addressed as well. And if you have life and critical together, again, you're going to have to really consider about getting that separate. Now, if you want to have a chat with me about how to get that, I do it on a daily basis. I'm out to see clients all the time. I am changing these things for them all the time, okay? Does it cost you any money to get that changed? Absolutely, not one red cent does it cost you, okay? Now, do I get paid? Yes, the insurance companies pay me, absolutely. But it's a win-win-win situation. You're getting your the insurances that you've been sold fixed into what you actually should have had in the first place and what you want and what you absolutely need, that is going to do the most for you. Yes, I win. The insurance company pays me. Fabulous. Yeah, so everybody wins, really. So give us a wee shout. Hit me up on Facebook or whatever, and yeah, I'll see you in the next video. I hope that was helpful to you all. All right, have a lovely Sunday. Bye.